Are long-term interest rates stubbornly refusing to fall? Last week, the U.S. 10-year Treasury yield made several attempts to dip below 4%, but ultimately, it couldn't quite break through. On Monday, the yield surprisingly climbed back towards the 4.1% mark, a level it has comfortably held since early September. Even though recent economic data hasn't been overwhelmingly positive, it hasn't been bad enough to trigger a significant surge in the bond market. For example, the November ISM data, while not stellar, had a decent PMI number, and ISM prices remained high, nearing 60. Adding to the complexity, 5 out of the last 6 bond auctions saw yields tail, meaning they ended up higher than expected. But here's where it gets controversial. This situation highlights the tug-of-war between economic realities and market expectations. The data isn't painting a clear picture, leaving investors unsure of where to place their bets. What does this mean for you? It suggests that predicting the direction of long-term interest rates is incredibly challenging right now. In other news, international trade statistics provide information on imports and exports of goods and services between New Zealand and its trading partners. The testimony focuses on the current state of the banking sector and progress on priorities as Vice Chair for Supervision. The financial sector is critical, acting as an intermediary to channel savings into investments. Supervision and regulation must support a safe and sound banking system. The banking system remains sound and resilient, with strong capital ratios and liquidity buffers. Non-bank financial institutions are increasing their share of the lending market, providing strong competition to regulated banks. RBNZ Governor Bremen's key focus is to maintain the core mandate, keeping inflation low and stable. And this is the part most people miss. The interplay between traditional banking and the rise of non-bank financial institutions is a critical factor. What are your thoughts? Do you believe the current economic data justifies the existing interest rate levels? Share your opinions in the comments below.